This video shows how to build a discounted cash flow spreadsheet. I start with a blank Excel workbook and construct an after-tax discounted cash flow model for a project lasting 20 years. I'm using Microsoft Office 2019. If you're using Microsoft 365 or Office 2013 or 2016, the steps are the same. If you want to follow along, download the workbook at towering-skills.com/docs/fa001.xlsx. The first step in building an Excel workbook is to check the cell styles to see if any changes are needed. The styles are located on the Home tab. Click on the down-facing More arrow, or type the command keys alternate H for Home, J for Styles. It's helpful to have the input, link cell, heading 1, heading 2, heading 3, title, total, comma, currency, and percent styles. An assortment of colored theme cell styles also are useful, although we won't use them in this video. If there are a large number of cell styles, delete the ones you do not plan to use. Next, we'll apply a style to the entire workbook to serve as a default style. To do this, we'll select the entire sheet by typing Control-A. Then we'll format all the cells in the comma-0 style by typing Alt-H, J, and selecting the comma-0 style. With all cells still selected, we'll set the width of all of the columns to 45 points. We'll set the column A so later we can insert mathematical signs and abbreviations to help guide future users of the spreadsheet. We'll do this by selecting column A and formatting the column as a text style. Also, we'll set the column width to about 25 points. Now we'll enter the spreadsheet title and subtitles. In cell B1, we'll type the word project name. And in cell B2, we'll type discounted cash flow. We'll format cells B1 and B2 as title styles, and we'll set the column width of column B to about 202 points. At this point, you should save the document with a relevant file name, perhaps using a portion of the project title. The best way to do this is to use the command key F12. We'll now add the project year. In cell B5, we'll add the words project year. And in cell D5, we'll enter a 0. In cell E5, we'll enter the formula D5 plus 1. And we'll copy cell E5 and paste it into F5. At this point, we could paste the cell E5 into the cells further to the right, but we'll wait and do that later when we can copy many rows at the same time. Now let's format the range of B5 through F5 using the header 3 style. As we build the spreadsheet, We'll show elements that increase the cash flow as positive numbers and elements that reduce the cash flow as negative numbers. We'll add the revenue in line 6. Since the revenue is money coming in cell A6, we'll add the plus sign. In cell B6, we'll add the word revenue. In cell E6, we'll insert the revenue value for year 1. For this example, we'll enter 50. Note that this model assumes that time zero's revenue is 0. It need not be, but that's our assumption. If year 2 through year 20 values are the same as the year 1 value, which is what we'll assume for this model, then we can link those values back to the year 1 value with formulas. So in cell F6, we'll add the formula E6. On the other hand, if you have different revenue values, you can enter your values. We'll format cell E6 as an input style. Which has a light blue fill color and black borders. We'll add the operating cost in line 7. Since the operating cost is money flowing out in cell A7, we'll add the negative sign. In cell B7, we'll add the words operating cost. And in cell E7, we'll add the operating cost value, which for this example is -20. Like the row above for revenue, this example assumes the operating cost is the same for all years. So in cell E7, we'll enter the formula E7. And also like the prior line for revenue, the workbook assumes the time zero operating cost is 0. If you have different operating cost values, enter them. We'll format cell E7 as an input value. We'll now add the before tax income in line 8. The before tax income is the sum of the revenue and the negative operating costs. So in cell A8, we'll add the abbreviation S/T with the abbreviation standing for subtotal. In cell B8, we'll add the words before tax income. In cell E8, we'll add the formula E6 plus E7 to sum the revenue and the operating cost, with the operating cost entered as a negative number. We'll copy E8 and paste it into cell F8. We'll format line 8 as a total style. We'll add the depreciation in line 9. Since the depreciation is money flowing out in cell A9, we'll add negative sign. And in cell B9, we'll add the word depreciation. In cells E9 through F9, we'll add the fill color yellow. I use yellow highlighting to indicate portions of a spreadsheet that need correction. In other words, elements that need further work. Later we'll remove the yellow color and add formulas to calculate the depreciation. The yellow fill color will remind us to return to these cells. Next we'll add the taxable income in line 10. Because the taxable income is found by subtracting the depreciation from the before tax income in cell A10, we'll add ST for subtotal. In cell B10, we'll add the words taxable income. In cell E10, we'll add the formula E8 plus E9 to sum the before-tax income and the depreciation, with the depreciation entered as a negative number. We'll copy the cell E10 and paste it into F10. Next, we'll add the income tax in line 11. Since the income tax is money flowing out, in cell A11, we'll add the negative sign. And in cell B11, we'll add the words income tax. In cell C11, we'll add the income tax rate. For this example, we'll enter 21%. (21% is the U.S. federal income tax rate as of early 2021. But this should be whatever is your overall income tax rate, which could include federal, state, and local income taxes, and will format the cell as a percentage style with 3 significant digits. We'll also format cell C11 as an input style. In cell E11, we'll add the formula negative absolute C11 times E10. The minus sign ensures that the tax is money going out. We'll copy cell E11 and paste it into cell F11. Next, we'll add the income after tax in line 12. Since the income after tax is obtained by subtracting the income tax from the taxable income, in cell A12, we'll add the ST abbreviation for subtotal. And in cell B12, we'll add the words income after tax. In cell E12, we'll add the formula E10 plus E11 to sum the taxable income and the income tax, with the income tax entered as a negative number. We'll copy cell E12 and paste it into cell F12. And we'll format line 12 as a total style. Now we'll copy the formulas and formatting in column F and paste them into columns F through X. We'll leave line 13 blank. Now we'll add capital in line 14. Since capital is money flowing out, in cell A14, we'll add the negative sign. And in cell B14, we'll add the word capital. In cells D14 through H14, we'll enter the capital as negative numbers. This model is limited to entering capital in time 0 and in the first 4 years. Depreciation is only linked to these 5 periods. You could construct a spreadsheet where capital could be entered in every year, but when calculating depreciation, it would be quite complex. Being able to enter capital in 5 periods will still be reasonably complex. For this example, we'll enter the capital values negative 100, 0, 0, 0, and 0. Users of this spreadsheet could enter any values they want for capital in the 5 periods, and the spreadsheet will accommodate them. We'll format the cells D14 through H14 as inputs style. Next, we'll add the cash flow in line 15. Since the cash flow is income after tax less the capital, in cell A15 we'll add ST for subtotal. In cell B15 we'll add the words cash flow. In cell D15 we'll add the formula D8 for before tax income plus D11 for income tax plus D14 for capital. We'll copy cell D15 and paste it into cells D15 through X15. We'll format line 15 as a total style. Now we'll add a total column. We'll leave column Y blank. In cell Z5, we'll add the word total. Also, we'll align the text to the right. In cell Z6, we'll add the formula sum of D6 through X6. We'll pick up column D for time 0 because capital comes in during time 0 even if we assume there is no revenue, operating cost, depreciation, or income tax for time 0. We'll copy cell Z6 and paste it into Z6 through Z15. In cell Z13, we'll clear the contents. Now we want to format column Z. We'll do this by highlighting column X and using the format painter to format columns Y and Z. Returning to the bottom left of the spreadsheet, we'll leave line 16 blank and add the cumulative cash flow in line 17. In cell A17, we'll add the abbreviation C/T with the abbreviation standing for cumulative total. In cell B17, we'll add the words cumulative cash flow. In cell D17, we'll add the formula D15. In cell C17, we'll add the formula E15 plus D17. We'll copy cell E17 and paste it into cells E17 through X17. Now we'll add the discount factor in line 18. In cell B18, we'll add the words discount rate / factor. In cell C18, we'll add the discount rate, which for this example is 10%. We'll format C18 as input and percentage styles with 3 significant digits. In cell D18, we'll add the formula 1 divided by paren 1 plus C18 absolute close paren to the power of D5. You'll recall that this is the compound interest formula. If you need a refresher on the compound interest formula, look at my other videos. We'll format cell D18 as a comma style with 3 decimal points. and also in a smaller text style, for example 10 points. This will remind us that this value does not get added but is used in a different way. We'll copy cell D18 and paste it into D18 through X18. Now we'll add the discounted cash flow on line 19. In cell A19, we'll add the abbreviation P, with P standing for product, or in other words, for the results of multiplication. In cell B19, we'll add the words discounted cash flow. In cell D19, we'll add the formula D15 times D18. Since the discounted cash flow is found by multiplying the cash flow value for each year by the discount factor for the corresponding year, we'll copy cell D19 and paste it into cells D19 through X19. In cell C19, we'll add the sum function for line 19. We'll add the cumulative discounted cash flow on line 20. In cell A20, we'll add the abbreviation C/T. And in cell B20, we'll add the words cum discounted cash flow. We'll add the formula sum of D19 through D19. And we'll absolute the first term. We'll copy cell D20, paste it into cells D20 through X20. Now we'll add the depreciation rates on line 21. In cell B21, we'll add the words depreciation makers 7-year. Before we enter the values, we'll format the line as a percentage style in 2 decimals. We'll also format the line 21 as a smaller text, for example 10 points, again to remind us that the values do not get added into other rows. Starting in cell E21, we'll enter the values 14.29, 24.49, 17.49, 12.49, 8.93, 8.92, 8.93, 4.46. These are the U.S. federal depreciation rates for equipment with 7-year life. Your situation may be different, but these are common U.S. rates for many types of equipment. In cell Z21, we'll add the formula sum of E21 through X21. This will help us verify that the total depreciation factors add up to 100%. Now that we have both the depreciation rates and the capital entered on the spreadsheet, we'll return to line 9 to add formulas for the depreciation. In cell E9, we'll add the formula D14 absoluted times E21. This calculates the depreciation for the capital in time 0 for the first year of operation. We'll copy cell E9 and paste it into cell F9. Next, we'll modify the formula in cell F9 by adding a term for the capital in year 1, which will be E14 absolute times E21. This formula calculates the depreciation for capital in time zero for the second year of operation plus the depreciation for capital in year one for its first year of operation. We'll copy cell F9 and paste it into cell G9. And we'll modify the formula in cell G1 by adding a term for the capital in year 2, which will be F14 absolute times E21. This formula calculates the depreciation for the capital in time zero for the third year of operation plus the depreciation for capital in year one for its second year of operation plus the depreciation for capital in year two for its first year of operation. We'll copy cell G9 and paste it into H9. And we'll modify the formula in cell H9 by adding a term for the capital in year 3, which will be G14 absolute times E21. This formula continues to depreciate the capital invested in periods 0, 1, and 2 and adds capital invested in year 3. We'll copy cell H9 and paste it into I9. And we'll modify the formula in I9 by adding a term for the capital in year 4. And that, of course, will be H14 absolute times E21. This formula continues to depreciate the capital invested in periods 0, 1, 2, and 3 and adds the capital invested in year 4. Finally, we'll copy cell I9 and paste it into cells I9 through X9. With the formulas corrected in line 9, we'll remove the yellow fill color. Next, we'll add the maximum capital at risk in line 23. In cell B23, we'll add the text MCR. And in cell D23, we'll add the formula negative min over the range D20 through X20. We'll add the net present value in line 24. In cell B24, we'll add the text MPV. And in cell D24, we'll add the formula sum over the range of D19 through X19. This is the sum of the discounted cash flow values. We could obtain the NPV other ways, but this is a good approach. The total should match cells Z19 and X20. We'll add the benefit cost ratio in line 25. In cell B25, we'll add the text BCR. And in cell D25, we'll add the formula D24 divided by D23 plus 1, which, if you've watched other of my videos, you'll recall this is the net present value divided by the maximum capital at risk plus 1. We'll format cell D25 as a comma style and show hundreds. Next, we'll add the internal rate of return on line 26. In cell B26, we'll add the text IRR. And in cell D26, we'll add the formula IRR over the range of D15 through X15. Note that we select the raw undiscounted cash flow values, including the value in time 0. We'll format the cell as a percentage style. Now we'll add the payback. But first, we'll add values to column AB that will help us calculate the payback. In cell AB4, we'll add the word row. And in cells AB5 through AB21, we'll enter the values 1, 2, 3, all the way through 17. Ensure that these are numbers, not formulas. We'll format column AB in a light gray font because these values are helper values. Now at the bottom of the spreadsheet in cell B27, we'll add the word payback. And in cell C27, we'll add the formula COUNTIF over the range E17 through X17. And the criteria will be if it's less than 0. This formula calculates the years where the cumulative cash flow is still negative. Note that the formula starts in year 1, not in time 0. We'll format cell C27 in a light gray font. The reason being the value is a helper value. We could place this calculation in the formula that we will create at cell D27, but I've moved it here to simplify the formula we are now going to create. In D27, we'll add the formula HLOOKUP, and the lookup value will be C27, the number we just calculated, over the range of E5 through X17, and want to jump down 13 rows, which we'll find here at AB17. And now I'm going to copy this formula and create an even more complex formula. And I'll add C27, and now I'll format this in comma style, showing tense. The lookup function finds the portion of the year where the payback occurs and adds this to the value in C27, which we indicated was the year before payback was complete. Finally, down in cell B30, we'll add the current date using the now function. And we'll format that with a custom date format of year, month, day. Finally, we'll save the workbook again using F12. Okay, we're done. But you might not be done. You can modify the spreadsheet to match your situation. The blue highlighted cells are the most obvious places to change inputs. To change the revenue, operating cost, income, tax rate, capital, and discount rate. You also can change the depreciation rates on line 21. If the revenue and the operating cost values vary year by year, you can enter the values you have in place of the formulas we entered on lines 6 and 7. You can add more information on other sheets or move this sheet into another workbook and link to complex calculations of revenue, operating cost, capital, and depreciation. You also can add lines for royalties and tax credits and many other things. What you have is a module you can change and modify to fit your needs. Happy sailing. If you want a copy of the workbook, download it at toweringskills.com/docs/fa001.xlsx. To learn more, go to toweringskills.com.